Hi guys, it's Henry from Investment for Expats here. If you haven't checked us out before, go to our website investmentforexpats.com. We've got over 500 blogs of how to optimize your time and wealth as an expat. The little game that I like to play with myself is where would I invest $10,000 right now in the current market. Just before we go on, just a bit of a disclaimer, this is not personal financial advice, and I would advise anyone doing your research before you invest. And all these views are my own. So what do we see in the markets right now? They're quite high. The US is actually picking up on inflation data, and they've baked it in that it's looking pretty good. So it's optimistic. For me, it seems too high in a high interest rate environment. If you can get kind of 4.5, 4.75 just for putting it in a 10-year and go play golf, it seems too high. And historically, if you backdate it, the markets normally in high interest rate environments, they haven't priced it in so much. So for me, there's a lot of positivity baked in, but that can be redone with a lot of negativity that comes in the market. This is particularly true in the US market. The S&P, you've seen kind of gains in January, the highest in the Nasdaq since 2001, I think it is. The S&P's also gained as well. So for me, it's a stock pickers market rather than a broad index one, and potentially look for companies that have been outvalued. A lot of the big tech names that potentially still have trading on low PE. I know we've talked about Meta a lot, but those that have a kind of intrinsic value, I do see Alphabet as a good buy, and Apple as well in that presently. If we kind of reverse to the other side of the pond and look more into the value sector as a broad macro perspective, looking at Japan and more internally the UK, I'm not too bullish on either of them economically, but I think it does show some value if you're looking at kind of PE ratios. Again, the UK, more defensive makeup of the nature of the companies in their FTSE 100 and the FTSE 250. Again, it kind of emulates that. I'd go more in the FTSE 250 than the FTSE 100. I think also European financials, there's a bit of value in them. I've written about the kind of the banks and the Ben Bianchi's research on how they're too big to fail, something like an Italian banks, etc. They're giving high dividends. They're also trading at pretty low valuations right now. On the EM market, I spoke a lot about China and Vietnam. I see China in its internal market, not the Hang Seng, as still worth going into, although it has had rapid increases since its opening up. Also, Vietnam, I've spoke about a lot, and kind of the prospects there. And also with the current case, India, that is looking quite high still, but again, for a long-term view on that, I am quite bullish about India, and hopefully this time it can be India's time with taking kind of factories from China. It's got a young demographic population, English speaking. Hopefully it can sort itself out on that. In terms of other assets, bonds, I think more towards the latter half of 2023 when or if the Fed pivots, maybe good in the US. In Europe, maybe look a bit later on long duration rather than short duration on that, and maybe go into something like tips with inflation protected elements on them. So there's just my views on the market outlook in 2023. Hope you find this at least somewhat useful. Again, it's not financial advice. If you are looking to invest, make sure you do your research beforehand on that.